This is Alan Bush with ADMIS with the daily financial forecast for Thursday, December 3rd. In the stock index futures, we did see some pressure yesterday. This linked to comments from Fed Chair Yellen that appeared to be a bit on the hawkish side as far as Fed policy is concerned. Also, we had the Fed's beige book indicating overall economic growth. So that reinforcing ideas that the Fed will be raising rates at their meeting on December 16th. Also, we are seeing some pressure today. This due to, once again, Yellen speaking this morning, reiterating her comments about a relatively firm economy and prospects of a rate increase later this month. But also, and this appears to be the main event, we had the European Central Bank at their policy meeting today, not as accommodative as many analysts had anticipated. So this put pressure on stock indices as well. So a lot of negative news over the last couple of days, which appears to fly in the face of the December seasonal, which suggests global equity markets will be higher for the month of December. And we're going to have to continue to go with that line of thinking. So even though there is pressure now, I think that we will see a recovery today, at least a partial recovery. And I do think that December will be an up month for stock indices. Now, moving over to the currencies, the euro currency trading sharply higher and the US dollar sharply lower. As we mentioned, the ECB had their policy meeting today. And what they did was they lowered a key interest rate, but they did not lower it enough. So that was rather disappointing. Also, they expanded their quantitative easing program in the sense of a later termination date, which now moves out to March of 2017. But what they did not do, they did not increase the amount of QE, so that was a bit disappointing in one sense for the dollar, but very bullish for the euro currency, which advanced well over 200 points. Also, this tended to support other European currencies, such as the Swiss franc and the British pound. Now, moving over to the interest rate futures markets, very severe declines today. This linked to Yellen's comments yesterday and again today about the possibility of an increase in the Fed funds rate. The beige book yesterday, also a bit on the bearish side. ECB information today from their statement, also bearish. But what we are seeing is the earliest indications that interest rates are likely to work a bit higher now as inflation rates globally, we feel, are starting to accelerate. I think this will be a major headwind, especially for the long end, the 30-year bonds. So I'm inclined to think that we are topping, or maybe have already topped, at the long end of the curve, and lower prices appear to be likely longer term for the 30-year Treasury bond futures. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.